James Altucher claims he just invested $50,000 into a $1 stock and is recommending 4 other stocks to buy right now. I reveal each one so you don't have to pay Altucher $10,000 for the names. Just remember, no paid or proprietary information is given away in this video. Everything is simply guesswork based on clues from a publicly available sales presentation. There's lots of stocks to uncover here, so we're just going to jump into things. Here's the clues for the first stock, which Altucher claims he personally put $50,000 in. The first clue is, the stock is under $5. Second is, it's involved in AI and cryptocurrencies. Third is, they mine Bitcoin and stake Ethereum. Fourth is, company has also found a unique way to profit from the large demand for AI large language models. Fifth is microcap worth about $500 million. And last is brought in $8 million leasing their computing power to AI firm. This is Bit Digital and the ticker is BTBT. Bit Digital is a New York-based company specializing in digital asset production and high-performance computing services. Established in 2015, it operates large-scale Bitcoin mining facilities across the United States, Canada, and Iceland. In addition to Bitcoin mining, Bit Digital offers cloud-based HPC services tailored for artificial intelligence applications. I got burnt on crypto mining stocks earlier this year, so I'm not personally interested, but that doesn't mean you shouldn't consider it. Here's what you should know before investing. First, is crypto cash machines still running hot? Bit Digital mined 44.9 Bitcoin in November 2024 and holds over $180 million in Bitcoin and Ethereum, giving it a solid crypto treasury to weather market swings. But crypto's volatility can still hit their balance sheet hard if prices tank. Second is AI Pivot. The next big bet, they're diversifying into AI with their white fiber brand, landing a 5 megawatt data center deal with Cerebras Systems in February 2025, which could stabilize revenue. However, pivoting to AI is risky if they can't compete with bigger players in the space. Third is debt-free vibes, but cash burns real. Bit Digital boasts zero debt and $332.5 million in liquidity as of November 2024, making it financially flexible. Still, their mining and expansion costs eat cash fast, so they got to keep those revenue streams flowing. Fourth is, analysts are hyped. Too hyped? Wall Street's giving BTBT a strong buy with price targets up to $7, citing their AI and crypto growth potential. But penny stocks like this can be overhyped, and a single bad quarter could send shares tumbling. Fifth is tariff tantrums could sting. Their operations span the US, Canada, and Iceland, which shields them from some trade drama, but Trump's 2025 tariff policies could jack up costs for their data center builds. Global uncertainty might make investors think twice. Here's what James says about the second stock. It's focused exclusively on data and is a leader in its field. You can't do AI without large amounts of data. Last year, it signed a major deal with one of the world's 5 largest technology firms. Recently signed another deal with one of the Mag 7, worth over $40 million in annualized revenue. Have now secured deals with 5 of the Mag 7, working on the other 2. The business is helping customers use data to create white-label generative AI projects. Financially rock solid, revenue almost $100 million, and they turned a small profit last year. This stock is InnoData and the ticker is INOD. InnoData is a data engineering company that helps businesses structure and analyze large volumes of complex information. They specialize in artificial intelligence, data annotation, and digital transformation services, often supporting clients in sectors like tech, finance, and healthcare. Their solutions are used to train AI models and streamline data workflows. I recommended InnoData last year, and it's one of the best stocks I've ever recommended. It's up over 400%, and I still think the stock is a borderline buy, though obviously less attractive than it was last year. Here's what to know. First is AI Data Kingpin. InnoData's riding the AI wave. InnoData is a leader in prepping high-quality data for AI models, fueling big dogs like NVIDIA with their new generative AI test and evaluation platform. But the stock's tied tight to the AI hype cycle, so if the buzz cools, it could take a hit. Second is stock roller coaster. Volatility is the name of the game. InnoData's share price has seen wild swings, like a 20% drop in a week during recent market chaos. This kind of turbulence can be a gut check for investors who don't have a stomach for the ride. Third is growth beast. Long-term gains are stacking up. Over 5 years, InnoData's delivered massive shareholder returns, outpacing the broader market with its focus on AI and data engineering. Still, past performance doesn't guarantee future wins, so keep your eyes peeled. Fourth is red flags alert. Cash flow questions linger. Some analysts have raised concerns about InnoData's cash flow and expenses, hinting at potential risks beneath the shiny AI surface. You'll want to dig into those financials before going all in. Fifth is pricey vibes. Is the stock overhyped? InnoData's valuation has skyrocketed with AI mania, making some analysts wonder if it's trading at a premium that's tough to justify. If growth stumbles, that lofty price tag could come crashing down. I'm going to reveal the stock in about 20 seconds, but before I do that, I want to remind you to click the link in the description to check out AlphaPix. I reviewed over 100 stock picking services, and AlphaPix performs the best and actually beats the market easily. If you click the link in the description, you get $50 off AlphaPix. So go ahead and click that link and take advantage of this amazing deal. Let's look at the clues for the third stock now. AI applied to the field of medicine. Develop next-gen medical imaging systems at much lower cost. Founded by a serial entrepreneur who established more than 20 companies and set up more than 70 patents, has access to 30 million patient records and 500 million medical images. Revenues up 1,000% from 2 years ago. Rev much smaller than the $50 million he'd rather see, but growing. Steve Cohen from Point72 bought over $3 million worth of the stock just a few months ago. Kathy Wood and Ken Griffin both bought about $3 million each. Normally, they'd focus on larger stocks. Only a tiny stake. This is NanoX Imaging, and the ticker is NNOX. NanoX Imaging is an Israeli medical technology company aiming to make advanced medical imaging more accessible and affordable worldwide. Their flagship product, Nanox ARC, is an FDA-cleared digital 3D tomosynthesis system that utilizes a proprietary cold cathode X-ray source, offering a cost-effective alternative to traditional imaging systems. This stock is a wild card, and I'm not too interested right now, but think it deserves a spot on the watch list. Here's what you should know if you're thinking about buying. First is game-changing tech that's turning heads. NanoX's systems uses AI and a digital X-ray source to deliver affordable, high-quality imaging, aiming to make diagnostics accessible worldwide. Their recent FDA clearance for broader use and CE mark in Europe show they're legit expanding fast. Second is revenues growing, but profits? Still a waiting game. The company pulled in $3 million in Q4 2024, up 22% year over year, but they're still posting losses, like $14.1 million last quarter, meaning you're betting on future growth, not instant cash flow. Third is analysts are bullish, but price targets got a haircut. Wall Street's got a moderate buy vibe with a $17.50 price target, hinting at a potential 250% upside from today's $5-ish price, though firms like Cantor Fitzgerald dropped targets from 12 to 9, signaling some caution. Fourth is cash is king, but they're burning through it. NanoX has a solid $83.5 million in cash, giving them runway to keep pushing commercialization, but they burned $39 million last year, so they'll need to tighten up or raise more funds down the line. Fifth is stocks a roller coaster. Volatility's no joke. NanoX's shares tanked 27% this quarter and dropped 9.75% after their latest earnings miss, with a beta of 1.98, meaning this stock swings hard. Buckle up if you're jumping in. Here's what James says about the last stock. Last is a personal favorite of these three. Security company that specializes in identity verification, biometrics, fraud prevention, and other cybersecurity stuff, becoming an increasingly huge issue. Emerging leader in its field, several Fortune 500 companies are already on board, millions of customers. Helped one of the UK's 4 largest clearing banks achieve a substantial drop in fraudulent applications. Helped Virgin Money completely digitize its customer journey, sped up application process, and helped them get new customers. This stock is Mitek Systems, and the ticker is MITK. Mitek Systems is a San Diego-based software company specializing in digital identity verification and mobile image processing using artificial intelligence. Mitek's solutions are widely used for mobile check deposits, identity verification, and fraud prevention. Their technology enables users to deposit checks via smartphone and verify identity documents such as passports and driver's licenses by comparing them to selfies. Mitek has had a rough year, but I think it's a good company and a borderline buy. Here's what to know before investing. First is identity verification is their bread and butter. Mitek's AI-powered tech helps banks and businesses verify identities and fight fraud, with solutions like Mobile Verify and Check Fraud Defender, trusted by over 7,900 organizations globally. This focus on a growing market for secure digital transactions makes them a solid contender in fintech. Second is Q1 2025 earnings, showed some serious glow-up. Mitek dropped a strong Q1 2025, with identity revenue up 13% year over year and a 21% adjusted earnings before interest, taxes, depreciation, and amortization margin, proving they're executing well despite a net loss. Their cash pile of $137.9 million also screams financial stability. Third is stock volatility might make you sweat. The stocks had a wild ride, up 29% in 3 months but down 11% annually over the past 3 years. So investors need to brace for some ups and downs. This kind of inconsistency can be a gut check for risk-averse folks. Fourth is Check Fraud Defender is a hidden gem. Their Check Fraud Defender product is gaining traction, nearing $12 million in annual contract value and snagging a top 10 financial institution as a client. This growth signals big potential in a niche but critical market. Fifth is low ROCE could raise eyebrows. Mytech's return on capital employed is a measly 1.1%, lagging way behind the software industry's 8.2% average, which suggests they're not squeezing enough profit from their investments. This could be a warning sign for long-term growth chasers. And make sure to click the link in the description to check out AlphaPix and get $50 off this amazing service.